back to Market on Close. I'm Marley Caden. Now, time to talk commodities. Let's bring in Scott Bauer. He's the CEO of Prosper Trading Academy. Joining us again this afternoon. Scott, thanks for being with us.
Always a pleasure.
Of course. Now, I think you know where I'm going to start here. We're going to start with oil, naturally. Taking a look right now, down almost 7% for WTI and Brent. Are you surprised that we're this far in the red?
Oh, my God. I mean, there's not a person I have spoken to, and these are pretty honest people, that is not surprised at this. The spike that we saw overnight or, over the weekend, 5% or so, that seemed like it was probably going higher from there. And then today, I mean, this move is unbelievable. And I think what this tells us is the geopolitical risk, at least what the market is thinking right now, is a lot less than they thought it was yesterday. And also that there's plenty of oil to go around, that even if, God forbid, the Strait of Hormuz was closed down or things escalated a little bit more, there's plenty of oil to go around. But to see this down 7% today after, spiking 5 or 5.5% yesterday in extended hours, there's not a person that I know that would have thought this would have been the case.
Well, I think when we got word that Iran did launch a retaliatory attack, despite there being no casualties, I assumed we would see movement in the opposing direction and that we would spend a lot of our time talking about that potential worst case scenario of the closing, since a part of the Iranian government did back closing the Strait of Hormuz and potentially seeing that 120, 130 a barrel that JP Morgan Oil is reporting. Do you think there's any shot we get there?
There's always a shot for something to happen. This would really have to escalate. I'd be very, very careful right now on the short. And I have been a sell first in crude, sell first position for months and months and months. I mean, we've talked about it ad nauseum. Now, though, is the time I think you have to be very, very careful. This is almost as if, this was a buy the rumor, sell the news type of event. But listen, things are not over, right? This escalation or continuance of what we have, it's still there. So I'd be very, very careful. Are we going to see 100 or 120? I don't know. I think a move like today shows the world that, maybe demand isn't there or there is enough supply or a combination. However, the geopolitical event risk is still there.
And do you think with that concern, do we have any concerns that we have to be prepared for a hike at the pump? I know that even if they close the strait, it's not as large of a concern for the United States, but overall, the global oil economy can affect us as well.
Yes, I think we absolutely need to be concerned. But again, if you bring in the fundamentals of supply and demand, it sure seems like, boy, there is ample supply, and that any risk would be that geopolitical risk. So I think we can see higher prices. In fact, I don't remember the last summer that we've seen prices where they are right now. I mean, summer we typically see a big bump up in prices. So are we going to see $100, $120 a barrel? I don't think we are, but I wouldn't say no, it's absolutely not going to happen.
All right, now let's move into our metals. I'm looking at our metals just green across the board as I'm looking over here at gold. We're at 33.94, green on the day. What are your thoughts here? Obviously, safe haven demand with anything geopolitical, but we're still hanging around near these all-time highs.
We are, and I think this is another surprise that we didn't see gold actually move higher than this. So again, maybe the market knows a little bit more than the political event risk that I think is going on. But it is a safe haven play. It is a run to gold when bad things happen. So I wouldn't want to short gold. I've been a buyer on dips. I'm still a buyer on dips here. I would have thought it would have been higher.
And I don't know if you saw that the Bank of America said that it thinks that the metal could reach $4,000 an ounce over the next year, despite all of the conflicts heating up, Israel, Iran, everything going on. The outlook, they're saying they think is going to be swayed more by the U.S. budget deficit. Do you think that merits a I guess, close to 18% jump from where we currently are?
I was just going to say that's about a 17, 18%
Yeah.
jump. I think that's really, really aggressive. I kind of do agree with them that this is more about risk here with the budget, with the dollar perhaps, than it is maybe with geopolitical events. But boy, that is an incredible move. But I guess, if I were to play the Monday morning quarterback in hindsight, you look to see the move that we've already have, no one would have believed it. So I don't put that out of the realm of possibility, but that would not be my base case.
And I know you said that you've been avoiding shorting. And as I was just looking at that chart, we didn't break below that pivot point of like 33.10-ish. Do you think that triggered some short covering that gave gold some of that lift today?
Absolutely. There's no doubt about it. There's a little bit heightened tensions out there. And I think some of those shorts in this case probably ran to cover maybe a little bit early, but just the fact that, we didn't see it break through there, that was pretty significant.
And as far as gold, what level are you specifically keeping an eye on?
It's really hard to say. I mean, 34 and a quarter, I think, is pretty important here. On the downside, if we got back to the 33.60-ish area, that would probably be a place that I would want to buy the dip. Again, this one, I am leading into a trade from the long side, whereas crude, I was leading into that with the short side.
All right, now let's switch to crypto. We've got to talk about Bitcoin. We have recovered some of those losses. We're back up over that $100,000 mark right now at 102,779. That was its lowest point since May 8th. So do you think we're starting to see some risk aversion here to something that we keep talking about may become a safety asset? And one of our earlier guests said that she feels very strongly that it will be a safe haven asset in the near-term future.
I think it is, and especially when we get an event that happens over the weekend, when normal trading hours are no one's trading. So what does someone do when nerves get heightened, or there's some risk, geopolitical risk out there? You go to the asset that you can trade, and the fact that this trades 24/7 did not surprise me that we saw such a dump on it over the last couple of days. If it had happened, this event had happened during the week, I'm not so sure we would have seen that much of a sell-off. But when all the other markets are closed, both equity and fixed income markets, and somebody wants to sell something, you go to what is readily available. So I think that's why we saw really an extra push to the downside. 101 was kind of my area that I thought we would get to. We obviously broke through that.
So breaking through that, I was reading on Coin Codex, and some of their analysts are foreseeing a price breakout with a projection of $136,472 in the next 5 days. Scott, do you think there's any shot we get to that kind of level?
The next 5 days, I would have to take the under on that pretty heavily. Could I see us, if things ebbed even more than what happened today with the attack that happened on the U.S. bases, and maybe it wasn't as bad as people had thought. So if that kind of continues and we get some calm over the next few days, I can see Bitcoin trading back to the 107, 108 level. Is it going to get back to all-time highs 112? I think that's going to be pretty difficult in the short run. To say that we're going to see basically a 30% increase over the next 5 days, I got to take the under on that.
I'm with you on that one, too. Thank you so much. That's Scott Bauer, the CEO of Prosper Trading Academy.